Today we dive into the timeless lessons from Robert Kiyosaki's book, Rich Dad, Poor Dad. This book teaches us how to think differently about money, invest wisely, and pursue financial freedom. Imagine a young professional like Sarah, who's stuck in a 9 to 5 job with no financial growth. By just applying these lessons, she can change her path and build wealth. So let's see how these principles change our life. So the two dads. So Robert Kiyosaki had two father figures in his life. His real father, the poor dad, who valued job security, and his friend's father, the rich dad, who emphasized financial independence. Think of someone you know who relies on a single job for income versus someone who builds multiple income streams. For let's look at Elon Musk. He started by coding games and evolved into a multi-entrepreneur by diversing his ventures. So because he had two dad figures, a rich person, rich dad with a rich mindset, and a poor dad with a poor mindset, we can delve into both these father figures in his life. So the first lesson that, that the book discusses is the assets versus liabilities. So let's look at a car. You want a car for luxury and you also want car for transportation. Is it an asset or a liability? So financial wisdom says this is a liability because the value of the car depreciates over time. And not only depreciates over time, it also makes you spend money on the maintenance of the car. Imagine if you are using a shared transportation like bus or a train, or even a things like Uber, where you can go from place to another place. On the long term, you are actually saving money just by using Uber versus a car. This also applies to buying a house. When you buy a house, it depends on the geography and the interest that you're paying to the bank and the rental income it generates. All these calculates into whether a house is a liability or an asset. Asset is something when you spend money on it today, the value of it appreciates over time. While a liability is something that you keep spending money on it, the value of it depreciates over time. So the importance of financial education. So the difference between liabilities and just about how the difference between assets and liabilities is crucial. Financial education helps you to make smart decisions. So imagine if you knew about tax benefits and invested in mutual funds and to so let's assume the case of a Tom who invested his money in mutual funds to save for his children, by which he got tax benefits. He saved money, he reduced unnecessary fees, and also made sure that the kid has extra money just because he put his money in mutual fund. So this kind of financial literacy or financial education helps you not just saving taxes, also making sure your money is working for you. So the value of mindset. A wealthy mindset will help you in a long way. So picture Serena Williams. She did not just rely on talent but built a business empire by thinking ahead and seizing investment opportunities. So, so Rich Dad here believed in embracing opportunities and learning from failures. Your mindset determines your wealth. Now, working for money versus making money work for you. So, most people work very hard for money, but this book, which Robert Kiyosaki wrote, advocates for making money work for you. So, that involves investing in assets that generate income and allows you greater financial freedom and time to pursue passions. It's important to make sure that you create passive income or income that any income, any asset that would generate income. For example, you buying a house that would generate your rental income over a period of time. Here, let's discuss the role of entrepreneurship. So, just being you as an entrepreneur and you having entrepreneurship abilities, you can control your financial future. So, let's look at this company called Baiju. So, Baiji Ravinder started teaching maths and created an education tech giant. Maybe it's not that anymore, but he created a $1 billion company at one point of time because he had this passion about teaching. So his journey, his entrepreneurship journey, opened doors to innovation and financial success. So look at this. So Robert Kiyosaki looks at real estate as a very powerful investment tool. So this can be used to build passive income. So you can buy a small property to rent it out. Over time, the rental income covered your mortgage. But that's the important part. If your rental income does not cover your mortgage, then that real estate is a liability. So you need to make sure that the rental income covers your mortgage and you make money every month while the value of the property grows, and that is an investment. So the real estate has also become a liability in certain countries and certain cities. Understanding cash flow. So every small business owner who focused on balancing incomes and expenses. So when you are a small business or when you are just looking at your own money that's coming in as assets and liabilities, expenses and savings, so the most important thing that you need to look at is the cash flow. You need to make sure there is cash flowing continuously every month, every week and every day. This would help you in the long run. Just by making sure you have a steady cash flow, you can make any business thrive, including your life and financial future of your life. Overcoming fear and risk. Fear often stops us from taking financial risks. So, how about taking calculated risk? So, let's look at any person who's afraid of investing in stock market. How about the same person started small educated himself, and now enjoys consistent returns. So, this is overcoming your fear and risk to make sure you make use of your opportunities that is in front of you. So the power of networking. Building a strong network is invaluable. Think of startups like Airbnb, where connections with investors and mentors led to global success. Surround yourself with people who uplift and inspire your growth. Learning from failures. Failures are stepping stones to success. Every failure teaches us valuable lessons. Oprah Winfrey was fired early in her career, but she used that experience to build a media empire. So use your failures as stepping stones to create amazing success. And the importance of financial goals. Clear goals guide success. So consider a person who plans every year, saves every year small amount for travel. So in 5 years' time, they would have 5 times of what they started off with. So let's say you wanted to travel to some place and then you started saving about $1,000 a month, and in every year you got about $12,000 for you to travel to the country of your choice. So it's always important to have financial goals. These financial goals help you shape, achieve your dream just by having these goals. So self investment is really important. Always make sure you improve yourself with skills and knowledge. If there is something to learn, learn it. So this learning would help you in the long term. So the best investment that you're gonna make is not in real estate or stocks, is in yourself. The impact of taxes. So you need to look at the rich people and the poor people. The poor people pay a lot of taxes, while the rich people knows how to avoid taxes. Well, taxes are a good thing, but we need to make sure that we can actually go around these taxes in legal ways. Just by using proper strategies, you can build wealth. Imagine saving about $10,000 of taxes every year. In 10 years, you got $100,000. So, just using a tax strategy would help you in a long way. Conclusion is financial wisdom. So, you can use the principles of rich dad and poor dad, and you can reshape your financial destiny from building assets to liabilities, building assets to learning from failures. These timeless lessons pave the way for independence and prosperity. What steps will you take today to start your journey? Start your journey and don't forget to subscribe to the channel. This will change your life. And thanks for listening.